Hello, investors. Welcome to another one of my expert interviews. Today, I have the pleasure of being joined by Dave Dubeau from Kamloops, BC. And Dave is here to share with us some pretty cool information. Really excited. And it's been a real pleasure meeting with and chatting with Dave over the last couple of months. So here's a little bit of information on Dave. He is the creator of something called Money Partner Formula, which I'm super excited to be able to introduce to you. And Dave specializes in working with mom and pop real estate investors. So for most of us, that is us. He helps us get started with raising capital. He's also a best-selling author, and he started his real estate journey unofficially in 2001, but officially in 2003. And I don't know how many people know this, but Dave lived in Costa Rica for 10 years. So Dave was way ahead of the curve before we even knew there was a curve. Dave, thank you so much for joining us today.
Elizabeth, it's my pleasure. Thanks for having me.
It's great to have you here. So when you and I were chatting a few weeks ago, you were telling me a little bit about the lifetime worth of an investor. And I thought, you know, there's so many people out there right now who are looking to build partnerships with people, to do joint ventures in order to be able to enable them to do bigger deals. I would love it if you could share with us your lifetime worth of an investor. You know, show us what that actually looks like on a tangible basis.
Oh, that sounds great, Elizabeth. Happy to do that. Starts with a bit of a backstory. And excuse me, as I told you, I think I'm getting over either a cold or COVID or both or whatever. So if I hack and sputter, forgive me.
We're just happy to have you, Dave.
So it starts with a backstory, Elizabeth. Back when I was in Costa Rica, I had a language training company down there. So we taught English to corporations. We'd send teachers out and give classes on site. And as I was very young, brand new entrepreneur. I was reading books on marketing and all this kind of stuff. And I came across a guy named Jay Abraham, brilliant strategist. And one of the things that I really remember from him was he talked about the lifetime value of a client. Lifetime value of a client. He said this is a really important number to know, because when you know how much a client is worth to you over time, that's going to give you a much bigger appreciation for that client. It's going to allow you to know how much time, effort, and money you can put into getting new clients. So I took that very seriously, and I crunched that number for my business then. And I realized that the lifetime value of a client to me was $12,000 at that time. I thought, holy crap, that's amazing. So armed with that knowledge, I went out and I knew how much I could pay salespeople to bring on new clients and how much I could invest in marketing and all this kind of stuff. And by knowing that, I was able to take my struggling little language company from the bottom of a very, very crowded pack of about 50 direct and indirect competitors to the top 3 in a little over 2 years. And a big part of that was understanding the lifetime value of a client. So fast forward, whatever it was, my goodness, a long time, 20 years or whatever. And I was doing something that you and I are both very familiar with, rent to own deals. I was doing those here in Kamloops. And that's when I first started raising capital. I thought, hey, you know what? Why don't I see what the lifetime value of an investor is, or the lifetime worth of an investor is, because we do LTV, that has a very different meaning in real estate than it does in business. So that's how they call lifetime value. So I call it lifetime worth of an investor. And as far as I know, I'm the first person that kind of really crunched this numbers, because I've been interviewed about it on a whole bunch of podcasts, and everybody goes, I never heard of that before. So here's how it works. And Elizabeth, are you okay if we use you as an example?
Yeah, absolutely. Happy to do that.
Okay, so I have spared all sorts of time and expense.
Oh, look at that.
Putting together a little diagram for us here. So hopefully you can see that. Yeah. So we have to crunch the number, we have to come up with a few numbers first. So number one is what kind of strategy we're going to be talking about here, because you've done all sorts of things, you do all sorts of things. What do you want to focus on? Rent to own? You want to focus on multifamily? You want to focus on BRRRRs? What should we focus on for this example?
I think most people right now in my community and in my world, we're looking at multifamilies right now. There's a lot of people who are wanting to really use that to increase their net worth over time. So
Okay,
let's
multifamilies.
yeah.
So that can be 2 to 2,000 units. What kind of size are we looking at here?
Let's pick a 4 because it's still
Okay.
residential financing at a 4. So let's do with that. Let's go with that one.
All right. So we're small multifamilies. So we're looking at a fourplex, and we need to kind of have parameters in here because some people are turning around pretty quickly. Other people buy and hold these things forever. So what kind of time frame should we be looking at for a fourplex?
Well, I think there's a lot of people who will buy smaller buildings, hold them for a while, and then sell them in order to pull out the capital and move up to bigger deals. So let's assume maybe a 10-year timeline.
Sounds perfect to me. All right. So a fourplex, 10-year buy and hold.
Yeah.
And I know every market, everybody's going to be different. It's very hard to peg this number down. But in your experience, what would you say is your net profit on a fourplex over that 10-year time frame when you take all of the different profit centers into account? And I'm aware of, I think, 8 of them. So, you've got, if you take into account instant equity, if you get a deal on the place, cash flow, mortgage pay down, property appreciation, forced depreciation, perhaps depreciation a little bit, reinvestment, all these kind of different things, leverage. What would you say conservatively would be your profit on a fourplex over a 10-year time frame?
Well, I mean, there's so many variables, like you mentioned, and the market and the purchase price and everything else. So let's go with a really broad stroke and make it easy for you. Let's say $500,000.
Now, is that your profit or is that the profit that you're going to be sharing with your investor partners?
Well, let's make it interesting and say we're going to share it with a JV partner.
50-50?
Yeah, 50-50.
All right. So your average profit would be 250,000, correct?
Correct.
Okay. There we go. Drawn in, putting that in there. Now,
Perfect.
Fourplex, fairly small multifamily. How many investors would you be working with on one of those kind of deals?
Well, I've seen deals where, sometimes you have one person qualify for the mortgage and you have somebody else bring the down payment, but let's keep things simple and assume that we have one partner who's going to bring in both.
Okay, one partner is bringing in the cash for the down payment.
Yeah.
Probably in the $200,000, $250,000 range plus.
Yeah.
They're bringing in their qualification. They're qualifying for the mortgage.
Yeah.
With or without you on that. Okay. Now, you've been in the game for quite a while now, Elizabeth, even though your youthful appearance would not make that evident, that's for sure. But
thanks, Dave.
What would you say if you're doing which I'm sure you are, you're doing a good job with your investor partners, how many different deals will that person do with you over the lifetime of your working relationship with that person? So not necessarily the 10 years with that particular deal, but realistically, you've been working with joint venture partners and investors for quite some time. How often do they reinvest with you?
It's funny because when I started out and I didn't do as good a job at communicating, at providing that service, at making sure that everything was transparent, they did less deals. As my investor management systems improved, they did more because the experience was more enjoyable. They felt more secure and they had more trust. So I would say if I average like from the beginning to now, let's say they do between 3 and 5 deals. So okay. 4, would 4 be an easy number to work with?
How about if we even go more conservative? Let's go with 3.
Okay.
Can we go with 3? I'm sure it's better than that, but I'd rather be conservative than pie in the sky.
Yeah, okay? Absolutely.
All right. So there we go. So we got your average profit, 250 grand. You need 1 investor per deal. On average, they'll do 3 deals with you over time. And how many, because you've been doing this for a while, how many referrals on average do you think you'd get per investor? And being conservative here. What do you think that is? And it may be less than 1. That's okay too. So, or it might be more. I don't know.
No, I'd say probably three. Like you're talking about referrals just to other investors. You're not
Right.
talking about like investors who refer coaching clients
No,
or
to other
private money,
investors.
like just other. So I'd say let's say three.
Three. Okay, very good. All right. Are you ready to crunch the number now, Elizabeth?
Yeah, this is exciting.
It is exciting. I think this is going to be a mind-blowing number for you and your followers as well. All right. So we've got, here we go. Again, no expense spared here. Your average profit per deal, 250,000. That's what we said, right?
Yeah.
Okay. Divided by the number of investors you need per deal. So you want one investor per deal, correct?
Yeah.
Okay. Multiplied by the number of deals that person's going to do with you over time, right?
Perfect. Yeah.
So that's three,
Three.
right?
Yeah.
And we said referrals over time. That's another three.
Yeah.
You might have to help me with my math because it's not my strong suit here, but let's see if we can do this. So 250 times one, that
Wait.
one I can do.
I'm gonna get my calculator out because I never
keep-
ever do mental arithmetic because it's always wrong. So
All right,
250 times one equals
that one
okay.
sorry, divided by one. 250 divided by one is 250,000, right?
Yes, it
Stays the
is.
same.
Yeah.
Okay, multiplied by three deals over time
Yeah.
brings that up to what?
750.
750.
Yeah.
Multiplied by three referrals
Yeah.
brings us to what?
Well, it's 250,000, right?
250,000 divided by
Yeah.
one is 250,000.
Yeah.
Multiplied by three
Three times
brings us
three.
to 750. Multiplied by three brings us to what?
2.25 million. That's insane.
That's you doing it on your calculator, so I'm trusting that actually is true. Yeah, so 750,000 times three, yeah, $2.25 million. That's what one investor is worth to you, Elizabeth Kelly.
Wow. That's crazy.
Is it worth sending them a birthday card?
Oh, it's worth sending them a box of chocolates and some flowers and maybe away on a trip.
It's a big number. It is. So when I first crunched this number, I was doing it with my rent home business, and I was more conservative with numbers because I hadn't been doing it long enough to really have that much of a track record. So I figured, my average profit on a rent own deal was about $40,000, one investor per deal. So divided by one is $40,000. And I thought number of deals over time, maybe I get them to do two deals with me over time. Chances are it's going to be higher, but I was being conservative.
Mm-hmm.
That brought that up to $80,000. And then I thought, okay, I'm going to be super conservative with the referral factor because so I went with, okay, if I get one referral for every two investors, that's probably pretty realistic. So basically the referral factor was 1.5. So my lifetime worth was $120,000 with that particular strategy being super conservative. And when I crunched that number, I went, my goodness, 15 years ago when I was doing my language training company in Costa Rica, I was thrilled with a $12,000 lifetime value of a client. I'm doing real estate now. It's $120,000. That is 10x what I was doing before. Now, you're doing multifamily. Your lifetime worth, plus you've got your systems in place. You've been doing this for a while, so you're much more proactive with your investor communications. You're much more proactive with getting referrals, much more comfortable about doing all of that. So you've really taken it to the next level. So I would say that number, that 2.25 million, is realistic. I would say that is real. In fact, it might even be conservative, but that's definitely in the ballpark there. So that's why this is such an important number to understand, because when you understand what the lifetime worth of an investor is to you, then when times get tough and you're feeling a little bit down in the dumps, you can always remember that number, have that emblazoned on the inside of your eyelid. So when you close your eyes, you see that number in bright orange, $2.25 million. And then when some investor gets a little bit snarky with you, or things aren't going exactly according to plan, or whatever's going on, you can take a look at that and you can understand what an investor is worth, not just to you, but to your financial future, your family, your net worth, your legacy, everything. And that just really helps you get through some of the tough times. Does that make sense?
Oh, Dave, I love that. It provides so much clarity and so much perspective. And sometimes, like you said, when you're dealing with a tough situation, that's exactly what you lose, is you lose perspective. And I don't know, have you noticed that everybody's a little bit different the last 2 years? It's really, for some people, it's been a really tough time. And I just find, having that perspective and that kindness can make a world of difference right now.
Yeah, most definitely. Yeah. So once you understand what an investor is worth to you, then now the next job is to go out and get some.
Yeah.
That's what it's all about. And that's what we do. We work with mom and pop real estate investors. We help them to leverage their network. And typically what we're helping the people do is raise their first $150,000 to $200,000 within 6 to 8 weeks. And then their first 1 to 1.5 million, usually within 6 to 12 months. So that's what we really help people do, is get them started, get the ball rolling with raising capital.
That's amazing. And you've helped some pretty big people over the years get their start in raising capital too.
Yeah, we've had the pleasure of working with some people who are starting to become quite well known. That's for sure. Yeah. So,
that's awesome.
Yeah.
So can I ask you a little bit about what that journey would
Sure.
look like with an investor?
The journey with an investor, or the journey to find investors?
Well, let's talk about, let's start at the beginning and talk about the journey to find investors. And then I'm really interested in hearing, how you retain investors too, once you have them, so that you can achieve that number that you said, where they continue to stay engaged and happy and referring people and that kind of stuff.
Yeah, perfect. So I've got this whole, what I call money partner formula. It's 5 steps to really getting everything up and rolling with raising capital. We don't have a heck of a lot of time to dive into that deep dive, but basically, big broad strokes. The first step is coming up with a target group of your ideal, perfect prospective investors. And here's who they are. They're people that you already have a pre-existing relationship with. They're people that are already in your network. So who are they? Friends, family members, co-workers, business associates, people you know from church, civic organizations, whatever it is. You know them, they know you. A lot of people, I tell them this, they go, well, Dave, I don't want to hit up my friends and family for money for my real estate deals. That feels creepy. Don't mix business and friendship, yada, yada. Well, here's the reality, guys. If you haven't got a track record of raising capital, quite frankly, who else is going to invest with you? Okay. So we got to start somewhere. And this is the best place to start for numerous reasons. Reason number one is just logic, right? For somebody to invest $200,000 with you to buy a fourplex, Elizabeth, they need to know you, like you, and trust you with their money. Would you agree?
100%.
Okay, so if we're going out and we haven't got a track record, we're trying to raise capital from strangers, they don't know you, they don't like you, they sure as heck do not trust you with their 200 grand. No. It ain't going to happen. You're starting from scratch, right? So we want to start with people that have that existing relationship with, and let's focus on that. So it's just the logical place to start. Second big reason is legalities. Now, time out. I'm not a lawyer, a securities guy, anything like that. I'm a real estate guy and a marketer. I'm just sharing what I understand, right? It's actually illegal for us to raise capital from strangers unless you're licensed to do so, like a mortgage broker or financial planner, stockbroker, etc.
Yeah.
Or if you set up certain exemptions or use corporate structures or doing offering memorandums and things like that, which tend to be way beyond buying a fourplex, right? The cost, the time, the effort, the expense to set all that up just isn't worth it for a mom and pop real estate investor. However, there is that area that we can play in, and that is working with people that we have that pre-existing relationship with. So that's where we want to focus on. A, it's the logical place to start. B, it's the safest place to start. C, it's the fastest, easiest place to start. So hopefully I've sold you on the idea that we want to create a target group of about 200 people that we can focus on. And when I say 200 people, everybody goes, Dave, I don't know 200 people. Chances are you do. Here's what we do with our clients, Elizabeth. We extract all their contacts from their cell phone, their social media contacts, their email contacts, do a data dump, merge, purge, deduplicate, and then chances are you're going to have a couple of thousand people there. Now, they aren't all legitimate contacts because a lot of your Facebook friends aren't really friends, right?
Yeah.
But instead of having to think up 200, now we're going to start with 2,000 and whittle it down to a couple of hundred people. Does that make sense?
Yep, absolutely.
Then part number two, part B of step number one here is to avoid doing what I did back in the day when I was starting to raise capital, which is I did the smart thing. I created that list, but then I did something very stupid. And I just charged in like a bull in a china shop saying, hey, it's Dave. I got deals. Have you got dough? Not quite that bad, but that's basically how it came across. I didn't raise any money, lost the deal. And worse than that, I turned off a lot of really good prospective investors because I was so damn clumsy. All right. So here's what you want to do instead. You want to find an automated way to reconnect with those 200 people on a personal level first to set the stage before we start talking money. Does that make sense? We call this a warm-up campaign. In fact, I was just talking with a client last night. We just did her warm-up campaign and worked amazingly well for her. 3 simple emails that we send out automatically, so you don't have to do them onesies. Get sent out. All she had to do was answer people when they got back to her. She actually ended up getting 3 investor meetings booked just from this process. And it's not even designed to do that. It's really just designed to break the ice and reconnect with people. So that's the first step you want to do. Create that list, break the ice with people, set the stage. Does that make sense?
Absolutely. I love this.
Yeah. Step number 2, once we've done that, we need to be ready in case some of those people say, hey, Elizabeth, I want to hear more about your deal, right? So you aren't caught like the deer in the headlights. You want to have what we call your $1 million investor presentation ready to go. So that way you can jump on Zoom with somebody just like we're doing right now, share your screen, show them the presentation, meet at Timmy's or Starbucks or whatever, show them your presentation and walk them through at a very high level how it all works. Now, here's something that's really important for your followers to pay attention to, Elizabeth, because here's the reality. You and I and all of your followers are what I lovingly and affectionately refer to as real estate weirdos. We are. I mean, my goodness, who else is investing their time listening or watching real estate podcasts unless they're a bit of a real estate weirdo, right? Who else is doing this? Most people are watching Netflix or they're scrolling on Facebook or whatever it is that they're doing. You and I and your followers are very, very interested in real estate investing. However, it's a huge mistake to assume that our prospective investors are that interested. They aren't. Your prospective investors are normal human beings who are far more interested in Netflix than they are in crunching numbers on a real estate deal. So we always have to keep that in mind. We have to keep it what I call Reader's Digest level simple, which means that if you go through your presentation, an average 13-year-old should be able to understand it. That's how simple we need to keep it. That doesn't mean that your potential investors are dumb. What it does mean is that their attention spans are pretty small, right? And if we go too deep with too much data, graphs, charts, factoids, all this kind of stuff, they don't care, right? They want to know that we know our stuff and they want to get the gist of how it works and they want to know what's in it for them. So that's what we really focus on with that, what I call your $1 million investor presentation. Okay, so that's the second step. Put that together, get a few practice runs under your belt. Step number 3 is really, sorry, again, I'm not sure if you're able to see this. It's back there. So step number 3 is all about the marketing, constant and consistent communication. What we find is working really well these days, Elizabeth, are electronic newsletters, video logs, blog posts, things that you can send to people in their email. They can watch it at their convenience. And again, we got to keep in mind, they're not into real estate like we are. So be careful with the jargon, be careful with overwhelming it, keep it short and sweet, and ideally edutaining, a little bit educational and hopefully a little bit entertaining so people kind of enjoy getting your stuff. Does that make sense? And then a very clear call to action at the end of all of your marketing. Hey, if you'd like to find out more, click on the link below, book a call. Let's have a conversation, see how this can work for you, right? So you want to have that edutaining communication coming out on a very consistent basis. So When we're working with clients, we got something coming out every single week. First week of the month, it's a electronic newsletter. Second week of the month, it's a blog post. Third week of the month, it's a video log. Fourth week of the month, another blog post. Then the next month starts. So it's just drip, 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 constant, consistent, edutaining communication with a clear call to action. Hey, if you'd like to find out more, click on the link, book a call. People say, well, Dave, how are you? Because here's my whole goal, Elizabeth. Instead of us chasing after investors, let's create curiosity, get them to put up their hand, get them to come to us. Because when we do that, then that conversation isn't a salesy conversation. It's just really a, hey, here's how it works. We educate them about how it works and we say, hey, is this something you're interested in? Yay or nay? Either way is okay.
Yeah.
Does that make sense?
Yeah, love it. Love it.
All right. Step number 4 is we want to be able to demonstrate our real estate experience, credibility, and authority. Okay. And here's the good news. People don't need to have 20 some years of experience like I have, 15 plus years of experience like you have, podcast interviews, working for Rich Dad, all this different stuff. You don't need to have any of that stuff, you guys. If you have even one successful real estate deal under your belt, you are ahead of 95% of the rest of the Canadian population. Not the other real estate weirdos like us, but the general population. 95% of them have never purchased a revenue property. Okay. So if you got one successful deal, you are light years ahead of most people. So again, it's all about creating that credibility, that authority. How do we do that? How you show up when you're meeting with somebody about investing with you, dress sharp, have sharp looking materials, a good looking website, all this kind of stuff goes a long way. Get interviewed on other people's podcasts, interview people, these kind of things, it goes a long way to building up that authority and credibility. And then step number 5, as you've experienced already, is once you've got a couple of investors on the go and you're doing a good job with them, it's so much easier to get more of them with referrals and testimonials. So you always want to be getting testimonials from your investor partners. You know, the best time to do that is when they're happy. So you've just cut them. Doesn't have to be big. Their first cash flow check. So I'm going to ask you to go down memory lane there, Elizabeth. And chances are, when you're first getting started with multifamily properties, the first cash flow checks you shared with your investor partners probably weren't that outstanding.
No, the rent to own ones were much better.
Exactly. But they were something. And chances are they were even better than what they would have been getting by putting their money in the bank. Would that be fair to say?
Oh, definitely.
Definitely. All right. So after your investor gets their first payment, that's a beautiful time to get referrals and testimonials. Even if that first check was $50, it's proof of concept. It shows them that, hey, you know what? I invested in Elizabeth. It's working. I'm making a return on my investment. Does that make sense?
Yeah, absolutely.
So there you go. There's the 5 steps. Start with that target market, reconnect with them. Step number 2 is have that $1 million investor presentation ready to go. So when people put up their hand, you got them something effective to show them. Step number 3, constant, consistent, edutaining marketing. Step 4, demonstrate your expertise and authority. And step number 5 is start the snowball effect once you got one or two investors on board.
Awesome. That's fantastic. So if people want to sign up with you, they can take a course to learn more about this, you know, to sort of dive deeper into the different areas and come up with a plan, or how does working with you, what does that look like for people?
Yeah, well, I realized a long time ago, Elizabeth, I suck as a coach. I'm not a good coach. So we don't really do coaching. What we do is we do done for you services. So I have a marketing business and we work with clients to get all of this stuff set up for them with their databases and their websites and their slide deck presentations, and practicing and role playing, rehearsing that with them, and getting their marketing materials up and going and sent out for them, their CRM system, all this techie stuff and marketing stuff that most people aren't very good at. We set it all up for them. So that's what my service is. If people want to find out more about me and that, they can check out moneypartnerformula.com, moneypartnerformula.com. You can get a free copy of my book. If you want, that would be my course. Every once in a while, we do a little workshop that's just kind of, showing people how it all works. But our main business is actually working with people and getting this done for them.
That's amazing. And I love that it's done for you, because a lot of people are challenged these days with time, people, we can get stuck. I mean, sometimes my marketing guys are like, okay, write some copy. And I'm literally like, whoo, and then it gets pushed and pushed and pushed and pushed because I'm like, I'm
Yeah.
not feeling super creative today. I just want to do stuff. So yeah,
And most people, like I'm a double weirdo. I'm a real estate weirdo and a marketing weirdo because I actually
wow.
love that stuff. But most people don't. That's what I realized. So I used to do, I used to have a home study course and say, hey, here's what to do and how to do it. And then I just got frustrated because people were too busy and they ended up not doing stuff. So
Yeah.
now we solve the problem. We do it for them. It gets done. It happens. They get results and everybody's happy.
That's amazing. That's fantastic. So are you finding that your clients will come back to you and sort of share their lifetime worth of an investor number with you afterwards?
Yeah, well, that's something we actually work on. You don't even have to have investors on board yet. We can crunch the number ahead of time and see what that's worth, what it looks like for them as well.
Fantastic. I
Yeah.
find sometimes what we get focused on as investors, particularly as new investors, is we get so focused on the deal and we figure that we'll just sometime in the future we'll figure out the financing piece. So there's a lot of new investors who might not have spoken to, a good mortgage broker or, a bank representative yet. They're looking at putting in offers, but they don't even know for sure that they can be approved. And then there might be people who, come to the situation where, they can't fully qualify for a deal. So they have to either sell the deal or they have to find a partner, but they haven't laid any of the foundation or the groundwork with their friends and family in order to be able to have those conversations and to have the credibility to transition people in going, hey, I have a deal. So there's definitely some hiccups that can happen there. And this sounds like it would be an ideal way to basically help people kind of ease that transition into working with investors and partners. A lot of people can get really insecure too. They're worried they're going to say the wrong thing or they're going to, confuse them or overwhelm them. And then they'll say no.
Yeah, that's a good point. That was one of my pet peeves in the real estate arena is that old saying, just find a good deal and the money will find you. And that's complete baloney, right? I've lost good deals because that's how I first dialed in this whole process was I failed miserably. I had a great deal on the go. I was like everybody, when I first got into real estate investing, I was doing creative deals, didn't need much money. Then I switched over into rent to own after a few years and I self-financed my first couple of deals. Then I ran out of cash, ran out of credit. And of course, that's when the perfect deal landed in my lap.
That's when the unicorn appears.
Yeah. So I needed to raise 85,000 for it. And I had the property under contract, the whole bit. And I ran out and did everything wrong, right? Because I'd heard, hey, if you find a good deal, the money's going to find you. I figured I still have to do stuff. So I tried dialing for dollars. I didn't have any experience with that. So I sucked at that. Plus, that's just terrible positioning, right? Who wants to get that call? Hey, I've got a great deal. Have you got him? That's just the wrong positioning.
Yeah.
So I did about a dozen of those calls, got rejected and pouty and quit doing that. I heard, hey, go out and turn every conversation into a real estate conversation. Use your elevator pitch and 30-second commercial, whatever. So I ran out and tried that with my little business card and briefcase and all that stuff. Got a bunch of weird looks from people because who the hell does 30-second commercials? Those just sound weird, right? So raised absolutely zero capital. And then I thought to myself, hey, if enough people see this deal, it's going to sell itself magically. So that's what I put together my list of a couple of hundred people. But instead of warming them up and breaking the ice, I just spammed them all with the deal, expecting to get a bunch of money thrown at me.
Yeah.
And all I got was a bunch of abuse thrown at me because it was like, hey, Dave, I haven't heard from you. One guy hadn't heard from me in 18 years, Elizabeth. And this was the first thing that showed up in his inbox. And so that's how I turned off a bunch of really, really good investors. I lost that deal. I live in a fairly small town. So there was had some egg on my face. I ticked off the seller, the realtor, the mortgage broker. My tenant buyer was super ticked off because they'd already given notice where they were renting. I mean, it was a disaster.
Oh.
So after I didn't have your wisdom at the time about, hey, what's this doing for me? I was just thinking, oh crap, why did this happen to me? But after the smoke settled, I kind of shook my head and said, that was really dumb. There's got to be a better way. This whole find a good deal, the money will find you is baloney. You got to have your investors lined up first. So that's when I said, hey, I know a thing or two about marketing. Why don't I apply marketing to raising capital. So that's what I did.
That's fantastic. And I love that you took all of your points where you sort of stumbled and you weren't they weren't optimal behaviors, and you used those as learning points to build a way to help other people. I think that's pretty fantastic.
Thank you very much. Yeah, it's been great. So we've been doing this for quite a few years now. We've been working directly, doing the done for you service for people for 6 or 7 years at this point. And we've worked with hundreds and hundreds of clients all across Canada, the US, internationally. And it's I think cumulatively, last time I crunched the numbers, we're at over $300 million raised for our clients and counting.
That's significant. That's a lot of properties bought and a lot of wealth accumulated for investors and the clients.
Exactly. Yeah.
That's awesome. Well, we'll be sure to share your contact information and links below for all of our people who are tuning in. And thank you so much, Dave, for your time. This has been fantastic. And I love learning about, companies like yours that are grassroots and built to support us as new investors. And thank you so much for your time today and teaching us a little bit about, who you are and what you do and how you help the investor community. It's much appreciated.
My pleasure, Elizabeth. Thanks for having me. And remember your number, $2.25 million. That's the lifetime worth of an investor for you.
That's crazy. So appreciate it. Love the insight. Thank you, Dave. That's going to help me make some better decisions for my business moving forward.
My pleasure. Take care.
Take care, Dave. All the best.